if I'm very direct, I think people got the Bitcoin story much faster than they got the Ethereum story. They understood what it is and where it fit into the portfolio. Ethereum took more explaining, and I'm not suggesting convincing, but if you can explain, it's a network, and if you believe traditional financial assets and crypto assets, and one day AI agents and real-world activity is going to happen on a decentralized platform, you're not only investing in ETH, the token, you're making a bet that you can participate in the network scale effects of the Ethereum platform and crypto and DeFi. No different than the early days of investing in the internet. It's such an important trend, you don't want to miss it.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show features the co-CEO of SharpLink, Joseph Chalom, and the Chief Strategy Officer of Consensys, Jason Linehan. So this is a big episode for ETH Bulls. We talk with one of the top ETH digital asset treasury companies in the world. We speak with them about why they are so focused on ETH as a treasury asset. Like, what sort of advantages does ETH offer over focusing on an asset like Bitcoin?
I think what's so interesting about this conversation is we had a chance to talk to the guy. He was part of a great team, as he will humbly say, of course, but the guy that basically helped usher in the Bitcoin and Ethereum ETFs to BlackRock. And I think getting inside his mind and then, asking him why and like what was the driving force that brought him from, out of early retirement with BlackRock into working with SharpLink and, setting forth an ETH acquisition strategy.
I think what's most exciting is to understand the opportunity for the public markets to have access to DeFi yield. Like, that's what SBET has represented to me. And really, again, any ETH treasury company, it's abstracting away all of the steps required to get access to ETH staking yield or other forms of yield on chain, and allowing someone to be able to simply buy a publicly traded stock that offers that same exposure.
We also talked to Jason about his whole Trustware thesis and why ETH, the asset, has value. And he breaks this down with, trust being the main underpinning of that thesis.
And this fills in the gap that we've talked about for years in regards to if Ethereum, the network, is growing and seeing an uptick in economic activity, being successful by whatever metric, then will ETH, the asset, accrue value? And I think they succinctly answer that question and offer up, why ETH as a market cap will, inevitably reach a multi-trillion-dollar valuation.
Something else we totally should have gotten in the show, but Joseph was just like, it took two bald Josephs to revitalize Ethereum. I thought was a great soundbite that unfortunately we laughed about off camera. We also get Joseph to speak to the differences between holding ETH in an ETF versus SharpLink. And I'm telling you, I think I mentioned this, he's the best person probably on planet Earth to answer that question.
So just a quick reminder, you can subscribe to the Edge podcast by going to the-edge.xyz. That is the Edge newsletter where you can get real-time notifications for any new episodes we publish. If you go to our link tree at edge_pod, that's probably the best place to subscribe to the Edge podcast on Spotify or Apple Podcasts or YouTube. And then one final shout out to all of our sponsors. Thank you to the folks that make all of this content possible. Again, all of our content is ungated because of the support of our sponsors. So make sure you go to the show notes to check out all the awesome teams that are behind us. We've got folks like TOROS Finance, we've got REDSTONE, we've got Maple Finance, Spark, and all sorts of other players in the space. But otherwise, we hope you enjoy the show. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, From value accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain oracle layer. To learn more, go to redstone.finance, and thanks to REDSTONE for supporting us here at the Edge Podcast and Edge Newsletter. Maple Finance is one of my favorite products in DeFi. It is a gateway to sustainable real yield powered by over $1 billion in AUM across USDC and BTC products. And now with Syrup USDC by Maple, anyone can earn institutional grade yield. Learn more at syrup.fi, and thanks to Maple for supporting us here at the Edge Podcast and Edge Newsletter. Falcon Finance, the team behind the fastest growing synthetic dollar, with institutional yields that are competitive and sustainable, offering yield optimized across your favorite DeFi protocols. Point season is now live. Learn more at falcon.finance. All right, let's introduce Joseph Chalom, co-CEO of SharpLink, and Jason Linehan, Chief Strategy Officer at Consensys. Guys, welcome to the Edge Podcast. How are you doing?
Doing great. Thanks for having us.
For the longest time, we've been fighting these onboarding challenges with friends over the years with DeFi yield, explaining how to set up wallets, telling them how to get access to a centralized exchange, understanding how to use DeFi applications, understanding what goes into actually using DeFi. And now we have a public offering that essentially is giving them access to DeFi yield, in this case, staked ETH yield. And so anyways, we're excited to talk about just all of the developments behind SharpLink, but we're also excited to talk about the work that Jason has been doing with what was called the Trustware Report. And so I think that goes to tell the story of what is behind Ethereum and why we are in the early innings of like worldwide adoption of Ethereum as a world ledger. So why don't we start though with you, Joseph? I want to give both of your backgrounds. There is so much to talk about. I am truthfully blown away by the fact that SharpLink was able to convince you to leave BlackRock. We'll get into that as well. But can you just tell us a bit more about like some of the products that you pioneered at BlackRock and all the work you did prior?
Sure. So I spent 20 years at BlackRock, the world's largest asset manager. For the first dozen or so, I was in a fintech business, a startup that built an operating platform for the world's largest asset manager. And then we turned it into an external SaaS business. And it was incredible fun, learning how to scale businesses that are institutional grade was one of the greatest learning experiences of my career. And then for the prior 5 or 6 years, I spent it in a role leading partnerships at BlackRock in a number of ecosystems, cloud, technology, data, and most interestingly, starting in 2019, a nascent digital asset business with one young, incredibly bright team member. And we spent the time from 2019 to 2021 observing the industry, trying to figure out who are the right players, who is trustworthy, who's mature enough to help figure out a strategy for BlackRock and its clients. And everything was client-driven. And then going back to 2021, we came to this conclusion that we should build a really small but incredibly mighty team of incredibly motivated professionals to figure out how we can serve the ecosystem and help our customers. We focused on 3 things. One is, how can we be involved in the stablecoin space? We partnered with Circle. We became an investor in Circle, and BlackRock managed their treasury reserve. Second is crypto access. You had trillions and trillions of dollars of institutional capital that had zero access and zero exposure to crypto. So we did a really groundbreaking integration with Coinbase Prime. So traditional players can get custody and prime brokerage and liquidity. And we also launched a few critical products. we worked with the SEC, and in January of 2024, we launched IBIT, among with many others, the first Bitcoin exchange-traded fund. And even more exciting, last July of 24, ETH, an Ethereum ETF. Those two products, in some ways, were the bridge to institutional finance, and I'd love to go into it later. And then finally focused on tokenization, launching funds that can benefit the online crypto community. And what's interesting, if you take a step back, what I'm going to remember most is not the accomplishments, but how we did it and who we did it with, and the mission. And the mission was to help bridge crypto to institutional investors. And that is in the early innings of adoption. And that's what brought me to SharpLink. And we could talk about it a little bit more. But my background is scaling technology, and there's nothing more exciting than when you have once-in-a-generation opportunities. And that's what SharpLink and Ethereum are offering.
Man, there's just so much we could dive into right there, Joseph. Just that pivotal moment of BlackRock bringing the Bitcoin ETF to the forefront, to the masses, was just kind of a surreal experience, even for myself. I want to get even more into, what makes a guy like you leave all that and go to SharpLink. So what's the special thing you saw? But first, we've also got Jason Linehan here. Jason, I want to kick it over to you and just tell us a bit about your background as well, and how do you end up being the chief strategy officer at Consensys?
Yeah, so I made the jump to Ethereum around 6 years ago. I worked as a software engineer for most of my career, trained as a mathematician. I founded a company called SMG, Special Mechanisms Group. It was sort of Ethereum's first dedicated mechanism design and engineering firm. So like Joseph, I share a passion for small but incredibly mighty teams, and that is what this was and is. Really, the goal of this was to build some really incredible products and incredible research to improve the Ethereum protocol and the user experience. SMG joined Consensys about 2 years ago, and I sort of led advanced research and development across, Consensys's products, so MetaMask, Infura, and Linea, for most of those 2 years, and worked on a lot of institutional outreach as well, and bringing kind of Ethereum into financial institutions and large commercial enterprises. When Consensys made an investment in SharpLink, I think it was really exciting for a lot of us. And I started working to kind of help the team at SharpLink set that treasury strategy up, as well as kind of bring some more of this material on Ethereum and kind of some of that deep insight into how the protocol works, how things tick, and start to, bringing that into a format that could be shared with a more general audience that really had never been exposed to Ethereum before.
Recently, I got to go to New York to celebrate Ethereum's 10-year anniversary, and I got to see Jason present this Trustware report, and we're going to go into all the detail here, but there's a very deep-seated why, a conviction behind why the two of you are in this space. So why don't we start with Joseph? I want to talk about this journey from BlackRock to SharpLink, but why Ethereum in the first place? How did you decide to get behind such enormous efforts at BlackRock, the ETF, which I believe as of today has around 14 billion in ETH, and then there's also the BUIDL fund, which I saw as a real breakthrough in the space. It was a real stamp of approval, of credibility that someone like BlackRock was choosing to build and deploy on Ethereum.
Sure. Everything we did was client-focused. There's a lot of innovation in this world, and I have a belief that if you experiment, you do proof of concepts, you do press releases, that's super fun. But until you put something in the hands of a customer, it's not innovation. And our customers, people who are investing for long-term goals, wanted to participate and do things to help enhance their returns. So we spent a lot of time, as did the industry, explaining to institutions what Bitcoin was. It's a store of value. It does it really well. Let me explain to you an analogy. It's very much like digital gold. You hold gold in a portfolio because it's not correlated to stocks and bonds, and it's inflation protection, and it's geopolitical risk protection. So the first thing we need to do as a fiduciary is explain all of this. And if I'm very direct, I think people got the Bitcoin story much faster than they got the Ethereum story. They understood what it is and where it fit into the portfolio. Ethereum took more explaining, and I'm not suggesting convincing, but if you can explain, it's a network, and if you believe traditional financial assets and crypto assets, and one day AI agents and real-world activity is going to happen on a decentralized platform, you're not only investing in ETH, the token, you're making a bet that you can participate in the network scale effects of the Ethereum platform and crypto and DeFi, no different than the early days of investing in the internet. It's such an important trend, you don't want to miss it. So a lot of it started with education. Then it was a question of how could customers get this into their portfolios? And when FTX happened and lots of people lost a lot of money, the idea of individuals or institutions self-custodying didn't make a lot of sense. So why not take this crypto asset, put it in a wrapper called an exchange-traded fund that you can have in your brokerage account, that you can have with your advisor, and give them exposure in a format they like while educating how it fit into a portfolio. And if you take a step back, we were helping people catch up with what younger generations had already known for 5 to 10 years. They needed a better way to invest in this, but they first had to understand how it fits into their long-term investments. One last plug, there are people who are speculators and there are people who are traders. Long-term investors are interested in the long-term outcome, not what happens intraday or in a week or even in a month. We needed to help educate them.
Yeah, maybe just kick that same question over to you, Jason. Like, why Ethereum in the first place for you?
Ethereum's the big stage, right? I mean, Ethereum's the center of the universe as far as digital assets are concerned for me. I mean, network effects are real. And ultimately, when you dig into the numbers, I mean, you don't really, frankly, need to dig very far to find out that like Ethereum is by a large margin the center of the universe when it comes to these things. That's not to say there's not great ideas and really interesting concepts happening outside of like Ethereum, L1 and L2s and the main roadmap. It's just to say that in terms of impact, right, in terms of scale and in terms of, really like, as Joseph's saying, like, production readiness and every really dimension, like, how long has it been running? How much liquidity does it handle? How much, what sorts of things has it gone through? Like, this is where all this stuff was invented. DeFi, all these different types of assets, all this new type of math and engineering. And it's really the best exemplar of a decentralized network that's able to do this. And, I from my perspective, like building teams or bringing clients or customers to a platform, it's really hard to recommend anything other than the big stage. And it's because it's like, if you really want to move the needle in the world, if you really want to have an impact, this is where you do it. So this is where the best and the brightest are needed and really where they ought to be. And it creates this self-fulfilling effect where like, that's where progress is going to happen. And so there's all kinds of reasons, but the main one is, it's, you have to aim for the top, and Ethereum is very clearly it's the platform. Joseph says it's the platform with the license to operate. And I think that is absolutely correct.
Okay, I want to go back to Joseph. We've kind of alluded to this question a little bit already, and you've answered it a little bit, but I just kind of want to ask you, Joseph, like very directly, like, how does somebody like you, on the tailwinds of all the success at BlackRock, building these like historic ETFs, working with this amazing team, transition into SharpLink, which is, you call it a startup. It's a new thing. It's a new idea. I guess what sold you to bring you over here?
The truth is, I retired after 20 years at BlackRock with the intention of taking 6 months to a year off. I told everyone that I wouldn't get a W-2 or a paycheck, till at least 2026. And I was comfortable leaving because I think it's important, if you're trying to create some sort of legacy, to leave on a high note. And also, there's a point in time when you have a comparative advantage in your career. I had experience, and it took experience to have experience, but the team and the firm was in incredible shape. So why not pass the torch to the next generation who could do it incredibly well? And then my intent was to be on a beach for a while and spend more time with my family. About a month in, I get a phone call, and it was... I thought the call was going to be to help Consensys, and it turns out it was to help SBET, SharpLink, and it was this idea that I could continue my mission. So previously, we had spent almost half a dozen years learning the crypto ecosystem, building knowledge, and then building products to drive adoption in institutional. It was not a short-term thing. It didn't all happen in 1 year as people write about. So the idea that I could lead a company that's driving a mission both in capital markets and in institutional adoption with a superior offering in this space, and I'm sure we'll get into it later, I jumped at it. And my retirement was short but sweet. And now I feel I'm just continuing that movement just from a different vantage point. And I retired. I didn't leave BlackRock to go to SBET, and I got enticed by the opportunity. Small can be super fun and nimble, and that is a big part of why I joined.
Jason, I want to talk at least for the next 15 minutes or so about this grand vision you have for Ethereum as trustware. And one of the things we'll put into the show notes, we really would encourage listeners to read the actual report. We're going to try to cover it at a high level and some of the key takeaways. But the Trustware Report, and I'm gonna read just one of the very first sentences in the executive summary, because I think it tells a nice story here. But this report explains how Ethereum's evolution into the world's digital trust infrastructure will make Ether's appreciation to multi-trillion-dollar valuations not merely possible, but economically inevitable. Talk to us more about this. What went into this report? What are some of the key takeaways? Why do you believe Ethereum is so valuable?
So first, just to say, this report was a product of a lot of really smart people. Lots of friends at Consensys, as well as people across the Ethereum ecosystem and folks in, call it traditional finance as well. So it's really kind of the aggregated wisdom kind of distilled into, again, hopefully something that you would be able to pick up and read for the first time. And this is something I think as an industry Ethereum is complicated. I think it's more complicated than we think because we're used to it. And in a way, one of the most important things we can be doing, and where I and a lot of the folks I work with are focusing a lot of our time actually, actively, is making it easier to understand in a way that's still faithful to the technical reality, right? And that's a really hard thing to do. That's really hard. So about 6 months ago, we were asked by a group of investors who we were talking to about Ethereum to make some type, as the experts on Ethereum, right, from their perspective, to make some type of valuation model, some type of, model that would be legible to them, and it would really explain Ethereum and Ether in a way. And the challenge we set ourselves was to do it in a way that didn't use the word second largest cryptocurrency, because that's always what's on the tin. It's always like, ETH is the world's second largest cryptocurrency, ... which is kind of not saying much in a way. It's saying a lot, but it's not saying why. Why is it that that's the case? What does it do for the world? And so we sort of set about this with that in mind and began this process of compiling what became this report. And there's a lot of people in the community love to talk about how to value Ether and Ethereum. And this is a conversation that's been going on for pretty much as long as the Ethereum's been around, and people get very passionate. And the goal here was to not to say necessarily like what we think, but to give people a framework so that they could have that discussion in a more structured way, and to be able to, use these tools to get to the outcome based on their set of beliefs. This is an important part of what makes a good valuation model useful. We needed to start with a concept. There's a lot of ways to think about Ethereum, and we went back to kind of one of these early ideas about the fact, or the idea that it's a trust machine. It's a trust machine because, one of the things you could say about economic transactions is that every economic transaction contains some element of trust inside of it. You have to trust that the transaction's correct, right? That it's getting recorded somewhere, because every new transaction is going to build on top of the last. And you need that record to be, very well kept, and those things to be very clean and correct, because this is how value flows around the world. And this happens at a rate that is astonishing, right? There's just a lot of transactions in the world. And this is really hard to do. It's really hard to get trust in your transactions. And it's a challenge to prove at any given time, like who owns what. It sounds like a really simple thing, but it's actually quite an elaborate system that the world has come up with in order to be able to do that. There's auditors and insurance and compliance. There's reconciliation. There's so many databases and databases for the databases and so on. You can you can decide on your own, but conservative estimates, this costs the world trillions of dollars a year in order to just police this risk. And humans are in the loop for a lot of this. Not for all of it, but at the end of the day. And this system, which does work okay, has compromises. It forces compromises. It slows the movement of capital around the world. It slows the movement of collateral. It represents this big drag, right, on the global financial system. And what we argue in the Trustware Report is essentially that what Ethereum is doing is offering a breakthrough from that. It's offering digital trust, as opposed to that whole stack of human in the loop, regulator and auditor and all this like mediated process. And that this digital trust is actually in some ways more safe and more powerful, and it's certainly cheaper and easier to use than what we have today. And so the ability to be able to create this digital trust at scale with math and capital, as opposed to these other things, is kind of the light bulb moment, right? And being able to use that digital trust to then go ahead and finalize transactions of arbitrary complexity in near real time with more safety than we have today, right? And at a cost of like a few cents. Like, that is revolutionary. And I think in the industry, in the Ethereum world, we think we move right past that. We're like, well, yeah, but let's talk about DeFi and let's talk about this. But it's like, wait. Just the fact that you can have near real-time settlement with the type of safety guarantees we have 24/7, that is revolutionary, period. Like, that is already in itself a quantum leap. And so it's really to start from that, and then to build from that premise into kind of a more advanced understanding of how to think about the asset.
One of the reasons I really love this report is I think that those that are new to entering into crypto in 2025, they're missing a lot of the journey that all of us might have experienced early on. We experienced Bitcoin and then Ethereum, and then we saw DeFi and all the other sorts of applications. And you were sort of like understanding the foundation of like, what was a digital store of value? What did it mean to have peer-to-peer cash? And anyways, it sets up for a really sound understanding of like, what's the end goal with something like Ethereum. Actually, another statement from the report I really loved was trust is arguably the world's largest yet least explicitly priced commodity. And again, goes into further understanding why Ethereum is a trust machine. But I think at its core, this report outlines an investment case for ETH, the asset. If Ethereum, the network, is hugely successful, then why will ETH, the asset, be that much more valuable? Why will it be a multi-trillion-dollar asset? So, Joseph, I'm wondering, for the types of folks that you would speak with at BlackRock, the clients you would speak with at BlackRock, what takeaways from this report do you think most resonate? What is helping folks nowadays to best understand the investment case for ETH, the asset?
Sure. I think on the one hand, ETH was hard to explain, but if you just take a step back, we are in August of 2025. ETH just spent 10 years building for this moment. And why do I say this moment? I think we're on the verge of just a massive paradigm shift. And what I mean is crypto is roughly $4 to $5 trillion market cap opportunity. And if that is all that the L1s and the L2s are supporting, great, that's one valuation model. There's $100 trillion of U.S. equity that are going to get tokenized. You could see it. Robinhood, eToro, others tokenizing stocks and funds. When that happens, the idea of trust is going to be critical. What do I mean by that? Things that traded Monday through Friday, 9 to 4, are going to be trading 24/7 with a velocity like we've never seen. And that means that it needs a new platform to do it. And the platform that's proven itself in stablecoins, real-world assets, has been Ethereum and the L2s that derive from it. So why is this important for the value of ETH? Let's just be very clear. We've been talking about Ethereum as a global settlement layer, a decentralized trust platform. The more assets and transactions that are secured on the Ethereum network have been proven to increase the value of ETH. I believe that report and subsequent work done, if you look back at the last 5 years, for each $2 secured on the network, on Ethereum and the L2s, it's driven about $1 of market cap value of Ethereum. And if you take a step back and say stablecoins are this size today, but Secretary Bessent says it's going to grow to $1 trillion over the next 3 years, if you look at the adoption of real-world assets, which is in the first inning and can literally go J-curve, the value of tokenized assets, which could be measured in the trillions or tens of trillions, they are going to be secured by a decentralized network. We believe the vast majority is going to be Ethereum. That is a bull case for ETH. I'm not in the business of making predictions as to the price of ETH. Others, I'll leave them to it. But if you can give them a fundamental framework to at least guide them, then they can have two inputs. What is the real world economy and what is the crypto economy going to be in tokenized form over a period of time? And that will tell you what the price of ETH should be. And in any scenario, it's going to be significantly higher than it is today because of the network effect. And that is a very simple way to think about it. If more assets are secured on the Ethereum network, the value of ETH will go up, and the value of it being a trust commodity, the highest value of money, is going to be critically important if you believe we're at a paradigm shift. And that's what I call the ETH opportunity. It's not a trade, it's an ETH opportunity. And for all of those who feel like they missed the early days of crypto, you are at still a very early entry point in the adoption of Ethereum. And that is the long-term ETH opportunity, not the ETH trade.
This episode is brought to you by Mantle, pioneering a revolutionary new category called blockchain for banking by bridging TradFi and Web3 into one unified stack. With on-chain transactions, TradFi rail compatibility, and integrated DeFi features, Mantle is reshaping how financial services work. Their flagship app UR lets users hold fiat and crypto all in one Swiss-backed account, making real-world finance usable on-chain. To learn more, go to ur.app and follow Mantle_official on Twitter. Spark, one of the leading DeFi protocols, has had a year like no other, deploying $2 billion into RWAs with BlackRock's Biddle and other institutional giants, adding over $1 billion in TVL, and distributing over $9 billion across the DeFi ecosystem. Now, Spark are setting their sights on further global expansion and have introduced the Spark token, which is available on leading centralized exchanges. There's never been a better time to discover Spark, the on-chain capital allocator. Learn more at spark.fi.
Guys, I want to get back to SharpLink a little bit more here. I want to ask you, Joseph, and there's actually probably nobody better in the world to ask this question to, which is pretty cool. But what's SharpLink's edge over the ETFs and other forms of ETH exposure?
If you look at this on a continuum, in the early days, if you wanted exposure to ETH, you bought it yourself, maybe custodied it or self-custodied it, and that was a good exposure. You were then responsible for the security. You were responsible to figure out how to stake it. You had all sorts of counterparty risk, but you owned $1 of ETH. You had $1 of value. And if it went up, great, wonderful. The next incarnation was in mid-2024, the onset of the Ethereum ETFs. And that was, in some ways, a value unlock because you didn't have to worry about owning the individual ETH. You can own a wrapper called an exchange-traded product. You can keep it with your advisor or brokerage fund. But that product, no matter who launched it in the US, did not have the ability to stake with approval from the regulators, and it still doesn't as of today. And when it does get that approval, which we think will be sometime in the near future, it will have limits on how much staking it can do. Because when you stake Ethereum, it takes a period to get it into the staking queue and a period to get it out. And ETH ETFs, as good as they are, will not be able to stake all their Ethereum. Maybe they'll be able to stake 50%. So whatever staking yield you get will be only on that 50% that's staked. So why a ETH treasury strategy like SharpLink SBET is we can own the ETH for you. You can buy it through a NASDAQ listed equity. We can give you the capital appreciation just by owning the ETH as we do. We can do 100% staking, which we do of the ETH, get you the best yields through native staking, restaking, and DeFi yield. And because you're sitting in a public equities generally get a forward value. So to date, the ownership of your ETH has come with a multiple to the NAV of the ETH. So think of it as just the next generation, a superior product to get ETH capital appreciation exposure, to get the staking exposure, and to do it in a familiar wrapper, a publicly listed entity listed on the NASDAQ.
So Joseph, why is it so important to just accumulate ETH right now? Like, why is there this crazy urgency in the market that I can feel amongst all the different treasury companies?
Yeah, so I think it's less about like why us as a treasury company or others, why a treasury strategy versus an ETF. I think if you go back to what I shared earlier, that we are at the verge of a very significant inflection point in Ethereum adoption and the Ethereum network usage. It is an Ethereum investment opportunity, a long-term one. So if you believe that, as we do deeply, you want to accumulate as much ETH as possible at the lowest price possible for as long as you can, not just for capital appreciation, but you own all that ETH. You have an ability to stake it in very native ways. You have an ability to restake it, and then you also have an ability to support the DeFi community and to get DeFi yield in ways that institutions historically have not been able to take advantage of. At SharpLink, we are going to do it in the most transparent, risk-adjusted way. There are going to be people who are well out on the risk curve. That's not going to be us. We come with institutional grade expectations, and we want to make sure our shareholders are protected in good cycles and bad cycles, and that's really, really important. But the ability to accumulate many, many billions of dollars of ETH and make it productive for the shareholders, very different than Bitcoin. Bitcoin has an incredible value proposition as a store of value, But if you can get 3, 4, 5% yield and compound that, that is an incredible story. And we're going to be doing it through the Ethereum ecosystem.
Jason, on that note of, why ETH over Bitcoin, can you expand on that? Like, I haven't seen as much bickering lately on the Twitter timeline between Bitcoin maximalists and, the Ethereum community. But I have noticed as the price of ETH has gone up, I'm starting to see, some of the loudest voices in that community erupt with, upset feelings over, what is Ethereum, what it represents. Is ETH the asset more valuable as Ethereum, the network, grows? Obviously, you've thought a lot about this. You have had a long career here working in the space. Just remind us, why ETH over Bitcoin? Why have SharpLink focus on ETH as a treasury asset?
First of all, I think the world is filled with incredibly cool assets, and that there's probably room for at least 2 digital assets, maybe more, hopefully more. So I don't think it's a question of ETH over Bitcoin or Bitcoin over Ether. I think it's just a question of what do you want to accomplish, right? And I think for SharpLink, again, the most that an average person will know about Ether is that it's the world's second largest cryptocurrency. The difference between that and what we understand in the industry that Ethereum and Ether is and represents is so vast that in a way it can't be ignored, right? It's I feel a felt mission to close that gap for people and bring them in, because once you understand Ether, you can understand a lot more about what gets people so excited about digital assets. Whereas I think if you understand Bitcoin, there's still a lot to learn. It's really where a lot of people start, but it's really the tip of the iceberg. Not to say the asset itself isn't incredibly important. I think what makes Ether and ETH so interesting is that it gives you so many new opportunities as a treasury company. I mean, it's an asset that it has store value properties, right? Historically, it has been and can be in the future deflationary, has a very conservative monetary policy, if you like. It's productive with a real yield denominated in Ether. It's derived partially from emissions, but partially from activity on the network. It's the only real blockchain that's been, if you like, profitable. I don't necessarily think that a cash flow perspective of valuing the network is good, but it remains true. And it's an asset that has utility for the network. It's part of how the network derives its security. And that's such a powerful thing that you can build, like EigenLayer is, entire, protocols to bring verifiable computation from this same collateral. It's the kind of the premier collateral asset in decentralized finance, right? There are so many dimensions to this asset, and there's not really a great analog. It's sort of a one-of-a-kind asset. It's easy to say that Bitcoin is like digital gold. I think people say that Ethereum's like digital oil, and I get that, but that doesn't capture the whole essence of what it does. I don't think there's a great analogy. I think it's really the first asset of this kind. And as a treasury company, most of the qualities of this asset make it, in a way, ideal and very compelling. And so, I mean, from my perspective, there's those two things. There's the gap between sort of what most people understand and then what we know is true about the asset. That represents an opportunity to educate, an opportunity to advance kind of knowledge. And then there's just the fact that intrinsically this asset can do so much more than really any other asset on the planet. It just makes it so interesting to work with.
Joseph, what's your perspective on this Bitcoin versus ETH?
I think it's not a necessary debate. Bitcoin has a role in people's wallets and people's portfolios. If you want that single-use store of value that can protect you against inflation, can protect you against geopolitical risk that might be completely uncorrelated to the stocks and bonds that you may own or not, that's amazing. And by the way, we owe to Michael Saylor in strategy, there already is a Bitcoin treasury that is dominant and creates massive value. We feel like there's also an investment opportunity for people to own ETH. And I've explained it. It's a long-term opportunity. It's not related to Bitcoin. If you believe in the network effect of what this is going to secure, and that this is going to be the neutral, trusted, decentralized, always-on network, then there's an investment case to own ETH. And I think we're at the early days of that because there is an inflection waiting to happen. I don't think it's a Bitcoin versus ETH. One will perform better than other at different points in the cycle. And I think there's a role for both to play in someone's investment portfolio. And I don't think they're mutually exclusive.
Joseph, I want to ask you a quick question here about, I've kind of thought of SharpLink as this like Trojan horse for ETH and kickstarting a whole new wave of education, kind of like what we talked about for Ethereum, the network, and ETH, the asset. There's like a ton of rich, fertile ground just there to go down a massive rabbit hole for years. But then you find DeFi. And then I think your mind's kind of blown again. And then you go down another rabbit hole within the Ethereum ecosystem. My question to you is, are clients from maybe your BlackRock network or are people starting to understand even what DeFi is yet? Are we there yet? Is it like how much has DeFi permeated through the institutional landscape? And then what does SharpLink mean for DeFi as well?
Sure. And if I took a step back, and I'm answering this as the co-CEO of SharpLink, not as BlackRock, this has been an evolution in education and understanding. First, it was Bitcoin. Now I think Ethereum is having its moment, not because of sales hype, but because people are understanding its value and what it can be in the future for the future of finance. DeFi is actually something that most financial institutions couldn't go near. Why? There were all sorts of lawsuits and Wells notices and questions about their legality. That has largely been solved. And then what's really enticing about DeFi, and I just want to put, if you're an investor or you're a bank or you're a trader, you like to associate yourself with the deepest pools of liquidity. And DeFi has incredible pools of liquidity. Initially, it was for degens, then it was for crypto native investors. But if you think about the tokenization that's going to be happening, some of it will happen on centralized exchanges, but you should be able to trade 24/7 securities, funds, crypto, NFTs, and real world investors are going to gravitate to where the best liquidity is, and that's where DeFi is. And it's not just on staking yields. So initially for SBET, our goal is very simple: raise capital from investors who believe in this opportunity, take that capital, buy ETH, and then stake it in different forms. Some of it will be native staking, some of it will be liquid staking, some of it will be restaking, and some of it will be DeFi. We're going to build a portfolio risk-adjusted of different means of expressing risk and retaining value. But for the wider community of investors, DeFi is going to be a huge opportunity for liquidity, just like centralized exchanges. There is a problem that needs to be solved, and that's identity. You have pools of liquidity, but you really need, if you're in a centralized finance world or a traditional finance world, to understand who you're trading with. And I think identity solutions and KYC and KYB will come. And when it does, these are going to be huge, huge unlocks for participants to interact with DeFi. This is going to be a continuum. Understand Bitcoin, understand Ethereum, understand DeFi, have a regulatory framework that is supportive of it all, and they're going to blend together. And it's not just going to be a crypto story. Tokenized assets, tokenized real-world activity is going to happen on DeFi, and we want to be part of promoting this through our staking activities on a risk-adjusted basis.
Hey folks, I want to tell you about our sponsor, Gearbox, the protocol that reimagines on-chain lending. With Gearbox, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about Gearbox, go to gearbox.fi. Rumple Labs is revolutionizing DeFi. Rumple lets you turn points into profits by tokenizing rewards you can trade from top protocols like Pendle, Athena, Fluid, Symbiotic, and many others. No more waiting for airdrops or TGEs. DeFi's smartest investors are already using Rumple to unlock instant liquidity and maximize their yields. So join Rumple today and start spinning your points into gold. Learn more at rumple.xyz. Puffer Institutional delivers secure, high-yield Ethereum staking built for institutions with battle-tested security, granular access controls, and the ability to boost APY by securing multiple AVSs. Puffer gives institutions full control and optimized returns. Puffer is also behind the Unify-based rollup, aiming to transform Ethereum's future in a world where all L2s are working together. To learn more, go to institutional.puffer.fi. Guys, why don't we move on to a more foundational, basic question that I think SharpLink investors will want to better understand, or potential SharpLink investors. Can you just talk to us about where does the money ultimately come from to acquire more ETH? A few of these that I want to make sure we run through, and if you can talk at a high level about the comparable advantages or disadvantages of them. We hear a lot of talk about ATM, what that stands for. You can walk through that. Registered direct offerings and convertible debt. So either one of you, or maybe you can tag team this.
Yeah, at a high level, if you take a step back, what is an Ethereum treasury strategy and what are we trying to do here at SharpLink SBET? One is, if you have investors who believe in this opportunity and they believe owning it through a public equity is a superior way to get exposure, we then go out and raise capital. And there's lots of ways to raise capital. In the case of SharpLink, in May, June of this year, they did a PIPE. They raised over $400 million from Consensys and other institutional investors. And that money is used to just go out and buy ETH and then stake it and provide yield, so it's really productive. We also have raised money, and we've publicly disclosed this, through an at-the-market program where you can raise capital on a daily basis from new equity investors. You could take those proceeds, you issue new shares, you could take those proceeds and do the same thing. Rinse and repeat. Buy ETH, stake it, make it productive. You could also do private offerings, directly marketed offerings. All of these are things that are subject to securities laws. We are extremely compliant and transparent. These are just different means of raising capital from both retail and institutional investors who want to participate in the opportunity. And again, that capital is used to effectuate our ETH strategy, accumulate stake, but try to do it in the most accretive way manner for the long-term benefit of the shareholders.
I want to set a bit of context here because what Michael Saylor has been doing, I think, confused a ton of people early on, myself included, and I hadn't really got as interested in what he's been up to until maybe the last few months, but I'm kind of curious if you guys are kind of paying attention to or watching kind of what he's doing as almost like a trailblazer in the space. And I want to call out just a few things. He's created all these like preferred equity products called Strife, Strike, Stride, and Stretch. He's had various degrees of success with each of them. I think Stretch looks like it's going to be potentially very fruitful here. But I've heard he's been using like AI to develop some of these. So my question, I'm kind of like asking you a ton of things here, but like, are you at the point where you're thinking about some of these more long-term exotic offerings? Is this anything that SharpLink would be cooking up, any of these like Saylor style products?
To date, we've done it through common equity, but we've disclosed publicly that we have all the opportunities to not only do public equity, but to do equity-linked capital raises. That could be through convertible debt. It could be through preferred. We've disclosed this to the public. And I think what's really interesting is there are different types of investors who are interested in getting exposure to Ethereum, and in our case, to SharpLink SBET in different ways. Some want to just straight own equity and hold it. Others want to have a pref. And there are others who are betting on the volatility of the asset. So Ethereum is a highly volatile asset. Treasury companies are volatile equities. And so there are some investors who like that volatility and want to get into a convertible offering where they're happy to have a coupon, but they're equally interested in that volatility, and it's more of a trade. And all of these are legitimate ways to access the capital markets. It's just investor preferences. And Michael Saylor has done it exceptionally well. He's created tremendous value, multiples of the value of the underlying Bitcoin that he owns. And he's done it in a really, really thoughtful way. And we and others have disclosed that we're going to do the same. It's just a matter of timing and finding the right investors who want different means of accessing our capital.
So, Joseph, you came from one of the biggest, maybe the biggest financial institutions in the world. How does that sort of set you up for an asymmetric advantage with working at SharpLink?
Well, I think there are a lot of great ETH treasury companies out there. I think what we're trying to do is have our own lane. And what I'm bringing from my 20 years of experience is institutional grade risk management, relationships with some of the largest pools of capital in the world. But to be honest with you, I wouldn't have joined if it wasn't for this incredible partnership we have with Consensys. And I think that is a differentiating competitive advantage. You can think of Consensys as the Ethereum company with the deepest experience, the best products, and having Joe Lubin as chairman of our board and that strategic relationship is going to pay dividends in the long run as we start participating more in the Ethereum ecosystem. So we are building a best-in-class leadership team. We're doing it through operational excellence and partnerships with some of the best asset managers and custodians in the world. But one of our competitive advantages that I think people need to understand is that unique relationship we have with Consensys.
Jason, can you expand on that? Talk to us about this strategic partnership between SharpLink and Consensys.
Yeah. So this is what's really exciting about an Ethereum or an ETH treasury company, right? Is this is an opportunity that's going to unfold over years and decades. And there's so many different facets and ways to engage capital and education and expertise because the platform is fully programmable, because you can financialize a lot of this and what we do. And so what Consensys is able to bring is really that full stack, from the, experience building the consumer products, the wallet with MetaMask, and kind of, the institutional grade service layer with stuff like Infura, and then really down to the protocol level, right? Building Linea, building the first ZKVM, building Besu and Teku, the software that runs, large parts of the Ethereum network, as well as 10 years, almost, the same length of time that Ethereum itself has been operating. And Joe, of course, is the co-founder of Ethereum. It's really a unique company, and it's hard to go very far in the industry before you bump into somebody who's either worked at Consensys or is working there now. And it's just such a powerful partnership because there's total alignment in the sense that, Consensys has always been this, steward of the Ethereum ecosystem and this sort of catalyst for growth, and bringing and onboarding, tens of millions of users and billions, hundreds of billions of dollars of capital, and all sorts of amazing tooling and advancements at the protocol level. And just Joe being the ultimate Ethereum bull for every one of the last 10 years. And so having that kind of full spectrum capability that can be kind of, accessed through a strategic advisory agreement is really powerful. It gives SharpLink a lot of different ways to engage with the community, to engage with the technical ecosystem. And it gives it a lot of expertise that, we feel as this opportunity continues to unfold is going to be highly differentiating.
Normally, I would have pushed for any ETH treasury company to be staking directly on Ethereum mainnet. But like one of the things we just learned having had the Linea team on the podcast recently is there's been a lot of thought that's gone into having a very deep alignment between Linea as an L2 with Ethereum, like really making some design choices that ensure that if Linea is growing and seeing an increase in economic activity, all underpinned by ETH the asset, that ETH the asset is actually accruing in value, and that we've got Ethereum, the network, benefiting from all of this. So anything else you can share about like what's gone into future strategy, what's gone into the thinking around working with an L2 like Linea?
I mean, first of all, Linea is a really unique L2 for all the reasons that you just named. I think like any of these, Ethereum infrastructure, DeFi infrastructure, SharpLink is, in a way, it's a kind of killer app, right? Because it's sort of like, it's institutional grade scale and practices and standards. And so if you can meet that bar, that means that your protocol and what you're doing is institutional grade, right? It's sort of a forcing function. And so really part of what I think the idea was of having SharpLink work through the Linea consortium is just having the ability to set those business requirements and see with that perspective across how they're building, what they're building, and what kind of decisions are made about allocation of capital. What sorts of things would be good to fund? What sorts of things would be important for the institutional community when it comes to Ethereum adoption? And we know that a lot of institutions right now and commercial enterprises are really attracted by the roll-up centric roadmap, right? They want to be a part of Ethereum, but they want to also be able to shape a little bit about their own policy, and they all have slightly different requirements. And layer twos are a great way for them to do that, right? But then the question comes up, well, am I on Ethereum, or am I on the Ethereum roadmap, or am I on this roll-ups roadmap? And the answer is nuance, right? And I think what Linea is able to do is really just align completely with the roadmap of the layer one. And this gives them a lot of confidence that, look, going forward, you're on the main pathway, right? You're on that pathway that, has billions of dollars of R&D funding on it and all the smartest people working on it. You're not off on a branch somewhere. And we think that, SharpLink's position being, kind of the voice of these institutional builders today and speaking to that institutional audience and being, in a way, an institution in itself is going to be a really vital viewpoint in that journey of building that technology.
Guys, I think this is a great place for us to wrap up the conversation. So I want to remind our listeners they should learn more about SharpLink by going to sharplink.com. They should follow SharpLink Gaming on X. Follow Joe Shalom, just exactly how it sounds, it's spelled. Follow 0x81B as in boy. That is Jason's handle. We'll put all of that into the show notes so you can easily reference it. We'll also put a link to the Trustware Report. Again, there's so much detail there to dig into. Highly recommend you actually read the report. Otherwise, guys, thank you so much for coming on. We know your time is valuable. It was such a joy to get to talk with both of you, and we are very grateful for all the work you're doing in this space.
Well, thank you guys. It's actually been a pleasure, and it's a real opportunity to tell not only the Ethereum story, but the Ethereum investment opportunity story, and watch what's happening.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.